Welcome to my friend of this presentation. We are going to talk about 3 ways to stop a foreclosure auction so that you don't end up losing everything, end up penniless, end up homeless, and end up losing all the equity in a property that you may own. Now, one thing I want to add, if this information does not apply to you currently, it may apply to someone that you know, and I ask that you pass this information on to them because it could be a life-changing information. It could be the blessing that they are praying for. So please take some time to watch this entire presentation. I'm going to be as quick as possible to respect your time, and this could very well help you or someone you know. So let's go ahead and dive right in. Quick disclaimer, none of this should be construed as legal or financial advice. I am not an attorney. I am simply sharing my opinion and experiences for educational purposes only. You are responsible for your actions and the consequences. So I got to put that out there. Now, who is this video for? It is for anyone who is facing the potential of losing their property to a foreclosure auction, okay? Or anyone who's already lost a property to a foreclosure auction. So as I mentioned before, you may own a property that's in danger of going to a foreclosure auction, or maybe you've had one that's gone to a foreclosure auction, or maybe you know somebody that is in one of those situations or scenarios. This information, this presentation was brought about because of our experience helping homeowners recover lost equity from foreclosure sales, and we've been doing that since 2015. What we have found is that foreclosure should never happen, actually. It is simply the result of homeowners not knowing what options are available to them. And so, in addition to just learning ways to stop a foreclosure auction, you're also going to learn the options and the rights that you have available to you as a homeowner who may be facing foreclosure. So this is why this information is so very important. So again, so you can understand your rights, solutions. If you've had a property that has gone to foreclosure auction, you'll learn how to recover any equity that may have been lost in that sale. And then you may also potentially qualify for cash support from the Renovo Support Fund. We'll talk about that later. Now, first thing we need to establish, if you're a homeowner that has a property in foreclosure or you know somebody in that situation, we have to establish is what path is right for you. Okay, there are 2 paths that most homeowners face. Path number 1 is the homeowner wants to keep the property and they can afford to do so. The problem that they may be facing is they just need to be able to get back to square one. They need to reinstate their loan. They need to restart. They just need help getting caught back up. And if they can just get caught back up, then they can continue to make the mortgage payments. If you fall in that category, there are certain steps you'll want to take. Okay. So that's path number 1, is if you want to keep the home, you want to keep the property, and if you just got some help to reinstate everything, you could continue to make the payments. Okay. Now, the second path is if somebody can't afford the home, or they simply don't want the property. And if that is the path, there are different actions to take. Okay. So if somebody is just, maybe someone's behind and they're like, even if I got caught back up, I can't continue to make the payments. I can't afford to do so. And sometimes that's the situation. Here is what we have found. Foreclosure is often not the result of financial irresponsibility. It is not the result of financial irresponsibility in most cases. Foreclosures are caused in most cases by some sort of life-changing event. Could be a divorce, could be the death of a family member, loved one, sole income earner, could be some sort of disaster like a natural disaster, a medical emergency. where someone is placed with the decision of, okay, do I pay my medical bills or do I pay my mortgage? And they choose life over property, which rightfully so. I would do the same if I was in that scenario. And so, could be the loss of a job. There's a whole host of reasons. Could be just moving. Whatever the reason, it's usually, again, foreclosure is usually not the result of someone being irresponsible financially. It's because something happened in their life that was outside their control. Okay. And the bottom line is all of us are one life change away from facing foreclosure. And that's the bottom line. So what are the options? So let's talk about this first path first. Is, let's say you or someone is in the scenario where they got behind for whatever reason, life happened, they got behind, but if they can just catch back up and they can continue to live in the property or keep the property and they can afford to do so, what are the options? What can they do? The first and probably the primary goal for any homeowner that wants to keep the property and can afford to do so is to either, one, reinstate the loan or pay it off. Okay. Now, this is the problem, though, that a lot of folks face, is that is usually a large lump sum payment. Okay. It's, maybe you're behind 3, 4, 5 months. Well, you've got to come up with that many months of payments all in one shot to reinstate the loan. Now, to clarify, reinstate just means to reestablish, to begin again. So if I'm behind, let me give you a quick example. Let's say I have a home loan of $100,000, and let's say my mortgage payment is $500 a month. Simple math. Say I'm behind 6 months worth of payments. Well, then I need to, in order to not have my home go to foreclosure, I need to come up with that 6 months. So 6 times 5 is 3,000, right? So I need to come up with $3,000. So whatever your number is, doesn't matter. This is what you need to come up with in order to reinstate the loan. Paying off the loan is great, but that's probably not feasible for most instances. Reinstating is difficult enough. And so, but this is the first option, is how can you reinstate the loan? Problem is, if a home is in foreclosure, most traditional banks are not going to lend any more money on that home. Homes that are in a foreclosure process have a lot of restrictions, and so most traditional banks will not help. But what you can do is you can get a private lender, a private individual, or a small business, small company that is more flexible than a bank. This is what I would recommend, is find a private lender. Let's use an example here. Let's say you need $10,000 to reinstate your loan with the bank. You find a private individual who will loan you that $10,000. Now, what you can do is, if you have equity in the property, you can use that equity to pay the lender back. And there are actually programs available that will allow you to access 10 to 20% of your equity with no monthly payments for up to 10 years. So what does that look like? Let's say you have a house worth $200,000. If you need $10,000 to reinstate the loan, you find a private lender who pays that $10,000, and then you can go and get 10% of your home equity, which would be $20,000, and you pay back the lender. And there are no monthly payments, so you're not adding to your monthly debt or your monthly, expenses, but you do have to pay back that $20,000 just at some point in the next 10 years. So you just have to ask yourself, could I figure something out within the next 10 years? Okay. Now, these, again, guys, these are just numbers for teaching purposes. The amount you pay back the lender is whatever you negotiate with them. Okay. So hopefully that makes sense. Is number one, find a way to reinstate the loan through a private lender, private individual, and then use the equity in your home to pay them back. That way you don't have to come out of pocket anything. You have your house pay the lender back. Make sense? Now, there is a company out there, renovousa.net. They may be able to help you in this scenario. Second way to stop a foreclosure is to do a loan modification. This is where you just modify the terms of your loan. Maybe you lower the payment, lower the interest rate. There's no guarantee that this will be approved. Even if you apply for a loan modification, the bank does not always have to approve it. It is not a guarantee, okay? If you're going to go this route, you need to keep pressure on the bank, on the trustee, keep track of all emails, all conversations. Ideally, try to speak with the same person every time you call the bank, get the same person's number, contact info, and document everything. And make sure that, you keep pressure on the bank to push your loan modification through. Be very, very careful of companies that are soliciting you, telling you they can help you with a loan modification. If they should not be asking you for money up front. If someone's going to help you with a loan modification, they need to be paid based on their performance, meaning you don't pay them unless they actually successfully get you a loan modification. If someone comes to you and says, we can help you do a loan mod, but you need to pay them money up front, beware of them. They're most likely a scam. Third way to stop a foreclosure auction is to simply ask for an extension or postponement of the auction date. Okay, so the way you would do this is you would contact the law firm that is representing the bank. That law firm is known as a trustee in a lot of states. And simply ask for an extension, postponement. Say you're working on some solutions. Can you get a 30-day postponement or 60 days or whatever? Now, there's no guarantee that they'll say yes, but it doesn't hurt to ask. Worst case scenario, they say no. Okay, fourth thing you can do is you can sell your property temporarily with an option to buy back the property at a set price within a certain amount of time. There are companies out there that will, they will give you the cash for your home. You then could use that cash to reinstate your loan or pay off your loan. And then you can negotiate a set price to repurchase your property back within a certain amount of time at a set price. There's multiple companies that offer those solutions, and we can give you referrals to those if that seems like a potential option that you're interested in. Now, let's talk about the second path. If somebody doesn't want the property or they cannot afford to live there anymore, what options do they have available to them? And we'll talk about each one of these in more detail. Option one, you can just simply sell the house, okay? Cash out, get what you can. Here's the thing, the closer you are to an auction date, the less you're going to get, okay? That's because there are less options for the person buying the property. Now, if you do not have any equity in the property or the property's underwater, meaning you owe more than what it's worth, what you want to do is find someone to take over your debt. And I'll explain that here in a minute. You can also partner with someone. Let's say the property needs some help. Maybe it needs to be fixed up, needs to be repaired. Partner with someone who will do the repairs, cover the cost of the repairs for you. And then you can sell it for max retail value and just split the proceeds with the person who's willing to do the fix up and cover the cost of that. Another option is what is called foreclosure defense, okay? This is where you can rent out your property, you can create an income stream from it, and you can attempt to prove that the foreclosure was a wrongful foreclosure. And again, renovousa.net can help with all of these. Now, let's talk about each one of these in detail so you know more about what I'm referring to. So selling cash out. Let's say you have a house. Again, these are just numbers for teaching purposes. Say you have a house worth 200,000, but it needs some work. Let's say the bank is owed 100,000. Well, if let's say you've got an auction date next week, you're going to need someone, you're going to need to find a buyer who has cash to make that purchase. If you have less than 30 days to an auction, you'll probably need to sell to someone who has cash. You probably won't be able to sell to someone who needs to go get a loan from a bank, because a bank is going to need 60, maybe even 90 days to qualify that person. Okay. So that is why the closer you are to an auction date, the less money you're probably going to get out of your property. But in this example, maybe you can find someone that has $125,000 cash, 100K goes to the bank, you take home 25. Not the best case scenario, but it is what it is. If you have the time, then try to sell your property retail, meaning try to sell through a realtor, list it on the public market. You're going to need at least minimum 60 to 90 days, preferably more. And make sure you factor in the cost to sell. Okay, so you may have 6% realtor fees, 1 to 3% closing costs. So roughly it's going to cost you 9% to sell your house. Okay, 9% of whatever the sales price is. So using the same example, let's say you have a house for 200,000 that you could sell for that price. 100K is going to go to the bank. 9% of 200,000 is $18,000. That's going to cover your realtor and your closing costs. So you're going to pocket 82,000. That's if you have the time to do that, right? So hopefully that explains why the more time you have, guys, the more you can take away. 82 is significantly more than 25, right? But a lot of folks may not have this option because they simply don't have the time. You need to understand the risk as well. If your buyer needs to get a loan in order to purchase your property, and let's say for whatever reason they can't get it in time or the loan falls through, you may not have time to find another buyer and you'll lose the house to a foreclosure auction. So be aware of that. That is one of the risks of not selling to a cash buyer. Okay. Now, again, RenovoUSA.net can always provide you a no obligation offer for your property if interested. Now, let's talk about what if you don't have any equity? What if you can't afford to sell your property? Then you may want to consider finding someone to take over your debt. Okay. Let's talk about what that looks like. Let's use that same example of a $200,000 house, but let's say you owe $190,000. So there's $10,000 in equity. If it costs you 7% to sell that property, then that means it's going to cost $14,000 to sell a $200,000 house. But if you only have $10,000 equity, that means you would have to come up with $4,000 to sell your house. You would actually have to pay somebody to sell your house for you. And that's not ideal, right? I would not want to do that. But it happens. It is a reality. If you or someone you know faces this situation or has this situation, or maybe they have no equity, like let's say the bank's owed $210,000 and the house is only worth $200,000, that would be known as an upside down property, where the property is worth less than what is owed to the bank. In that scenario, what you would want to do is you'd want to find somebody who's willing to reinstate your loan and then make your mortgage payments for you. Now, why would someone be willing to do that? Why would someone be willing to take over your debt? Here are 2 reasons why. Number 1, if they want to live in the property and they can just take over your debt, well, then they don't have to go qualify for their own loan through a bank. Saves them a lot of hassle. And it allows them to live in a home. It allows them to have that American dream. That's why they would consider taking over your debt so that they can fulfill their dream of owning a home. The other reason would be is an investor. Let's say your mortgage payment is $1,000 a month, but the market rent is $1,500. So if an investor can make your mortgage payments, but they can rent out your home for $1,500, well, 1,500 minus 1,000 that's $500 a month that an investor is making because they are able to pay your debt and rent out the property for more than the debt owed. Make sense? That is another reason why someone would be willing to take over your debt, is if they see a potential to profit. Okay. Now, what are the risks of this? The biggest risk is, let's say you find someone that says they can pay your mortgage payments for you. Well, what happens if they don't pay? Here's how you mitigate that. You can stipulate in your agreement with them that if they miss a payment on your loan, that the house will go back to you immediately. And that's not necessarily a bad thing, because let's say someone pays down your mortgage for a year or two, okay? And then for whatever reason, they miss a payment. Well, the house goes back to you. They've paid down your loan, and maybe the market has appreciated, and now you may be in a different position where maybe you can afford that home. Or maybe now there's equity in that home and you can sell it for a profit. Or you could simply just find somebody else to take over your debt. Okay. Lots of options. Again, RenovoUSA.net can help with this as well. Another example, another option for those that don't want the property or don't have equity. Let's say your house is worth $200,000 as is. Bank is owed $100,000. But if you could come up with some money to fix up the property, maybe you need some new paint, new carpet, you need to sprucing up the outside. And if you make it look nice, maybe you can sell it for $300,000. So what you can do is you could partner with someone who would be willing to make the repairs and pay for the repairs, and then you could split the profits with them. So let's say, for example, instead of selling for $200,000, you sell for $300,000. You pay the bank the $100,000 they're owed. That leaves $200,000 for you to split. Okay. And that's much better than, say, selling for cash, right? In these two examples that we had earlier. Right here, where if you do a quick sale, maybe you pocket $25,000. You sell for retail, maybe you pocket $82,000. Or you could split $200,000 in this example. Okay. It's just a different option. Now this will take time, right? But you could net more. You could make more money this way if you found someone willing to do this. Here again, RenovoUSA.net can offer this as well. Now here's another option, is foreclosure defense. This is if you suspect any wrongdoing by the bank. If you suspect any sort of fraud or anything like that, and you believe that you have evidence to prove that, then you may want to go the foreclosure defense route. Or if you simply want to generate income from your property. So here's what you do. Let's say your property can rent for $2,000 a month. So you rent it out, and maybe it costs $1,500 a month to pay for legal to do foreclosure defense, to go after the bank. Well, in this scenario, you would be earning $500 a month for as long as the foreclosure can be delayed. 3 to 5 years on average, sometimes longer. Okay. So you rent out to someone while you hire an attorney to perform foreclosure defense. And then you cash flow. The longest foreclosure I've seen delayed is 14 years. 3 to 5 is kind of the average. And we can refer you over to some folks that can help you out with this as well. Obviously, you would have to vacate the property with this scenario as well. So those are kind of the options. Here's the thing, guys. A lot of properties in foreclosure do have equity, but the problem is that equity can't be accessed because the home is in foreclosure. So the question then becomes, okay, how can we get the property out of foreclosure? And then maybe you can use the equity to restructure the debt and reinstate your loan, okay? Again, we've talked about how life events, loss of a job, medical, passing of a loved one, divorce, relocating, new job. These are the common causes of foreclosure, okay? We talked about some options if you can't afford to live in the home or you don't want the home anymore. But the longer you wait, the less options you have. Now, one thing we did not mention is this last thing right here. If the property has already sold at auction and any equity may have been lost, there is a way to recover that equity in some instances. We'll talk more about that here in a minute. So we talked about some of the solutions of finding a private individual or company that can lend you the funds to reinstate the loan so that you can stop the foreclosure auction, okay? A lot of these types of loans are based on the property itself, the value of the property, and not necessarily on your credit score, your employment status, your income, whatever. It's based on, these types of loans are based on the value of the property. And again, RenovoUSA.net can help out with these. Now, if you need to sell, you don't want to move, we talked about this, homeowner could sell with an option to buy back the property, okay, thus allowing them to continue to live and stop the auction. For properties that have already been sold at auction, you can try to recover the lost equity. Let me try to explain briefly how this works. Let's say you owe the bank $100,000, but your property sells at foreclosure auction for $150,000. By law, the bank is only going to take what is owed to them. Okay, so if your home sells for $150,000, but you only owe $100,000, that means there's $50,000 left over. That $50,000 can be recovered and given back to you. There is usually a court process to do that. Sometimes it requires the help of attorneys. We recommend this company to help you with that process. They've been doing it since 2015. Overage Refund Specialist LLC. Here's their website, overagerefunds.com. They do not charge anything up front for their services. What happens is they'll hire an attorney, they'll cover all the expenses, and if they're able to get you money back, they will take a percentage for their compensation. If they can't get you money back, you pay them nothing. That's how that works. And so this is another option, is if you can't sell or you don't want to sell or you just want to walk away, you can let it go to the auction and contact this company, and they may be able to help you recover any lost equity from your property. Or they may be willing to give you money up front before the auction. Just have to reach out to them and ask. Now, here's a final solution. If you have an auction where it's like within the next week or within the next 72, 48 hours, here is what I would do to stop a foreclosure auction within 48 hours. You can file bankruptcy. Now, that being said, understand this, please understand. Filing bankruptcy is not a long-term solution, okay? When you file a bankruptcy, it triggers what is called an automatic stay. What that means is a bank has to stop all procedures in a foreclosure. They have to stop the foreclosure auction. They can't go through with the auction if you have filed bankruptcy, okay? But it only buys you some time. It is a temporary solution. It is not long-term. It simply buys you another month or two so that you can find a better solution, whether that's reinstating the loan, selling the property, doing a loan modification, whatever it is. Filing bankruptcy should only be used when you have no other options to stop the sale. Okay, should only be used when there's no other options to stop the sale. You must understand the long-term, the consequences. Okay, if you file bankruptcy, all of your credit cards are going to be frozen. It's going to be on your credit score. You're probably not going to be able to refinance or get a loan to purchase a house of any kind for several years. I think it's 7. It only buys you time. It does not get rid of the foreclosure. Okay. What happens is the bank's going to stop for maybe a month or 2, and then they're going to restart the process. And your home still could be sold, even if you declare bankruptcy. Here are some resources for you so that you can understand bankruptcy and some of the basics. There's different types of bankruptcy, such as Chapter 7. Chapter 7 is where you basically liquidate all your assets and pay back your creditors as much as you can. Chapter 13 is a restructuring, where you basically restructure all your debts. Very important to understand these things. So be aware of the consequences. With that being said, if you want to take a picture of this, you can. These are kind of the steps to file bankruptcy. These are the steps that I would take if it was me. If I was about to lose my home and I had no other option and I needed to buy myself time, these are the steps that I would take to stop the foreclosure auction. Okay. I'd find out what bankruptcy court has jurisdiction over my county. Simple Google search, type in the name of my county and bankruptcy court. Then I would fill out some specific forms. Now these could change, but right now, Form B101 is what's called a voluntary petition for individuals filing bankruptcy. Okay. And then I'd also file Form B121. And then there is a fee to file bankruptcy. If I could not afford the fee, then I would file Form B103. Personally, I would elect a Chapter 13 over a Chapter 7. I'd elect a restructure versus a liquidation. That's the difference between 13 and 7. All of these forms can be found online. Okay, you can just Google them. I'd print them out, fill them out. Once I had them filled out, I'd go in person to my bankruptcy court. I'd file the forms with the bankruptcy court in my county. I would make sure to get a receipt and a copy of a form called a notice of bankruptcy case filing. Once I got that copy of the notice, I would email it, fax it, and mail it to the law firm handling the foreclosure. I would also file it with the court handling my foreclosure case if you live in a state that your foreclosure is done through the courts. Not all states do that, but if you lived in a state, or if I lived in a state where my foreclosure was handled by a court, by a judge, I'd make sure that that notice of bankruptcy case filing was filed with the judge and the court. That should stop the auction. I would also want to make sure that, the trustee and the court received that notice, and I would just want to confirm with them that the auction was postponed. At that point in time, I would get to work finding a long-term solution, like we've talked about already, reinstating the loan modification, selling the home, whatever it is. And then if for whatever reason, if I couldn't, find a long-term solution and the home does go to foreclosure auction, then I would seek help to recover any surplus funds from the auction. That's what I would do personally. Again, understand the consequences of bankruptcy. Again, this is not legal or financial advice. Understand the consequences. We talked about that. Now, if you already are in foreclosure, your credit score has probably already been affected, but a bankruptcy also is going to affect it. Again, if you file bankruptcy, your credit cards, you're not going to be able to use any credit cards. And be aware that you'll probably not be able to purchase a home or get a home loan for several years, probably 5 to 7 years. Again, bankruptcy only buys you time. It does not get rid of the foreclosure auction forever. Be aware of this. Now, Guys, here are some things not to do. Avoid these at all costs. A short sale. A short sale is getting approval from the bank to sell your property for less than what it's owed. Here's the thing, guys. This is a common misconception. A lot of folks believe that you need approval from the bank to sell your property. That is absolutely not true. You do not need permission to sell the house that you own. You don't need permission from the bank to sell your house. You can sell your property at any time. You do not need the bank's permission to do so. Okay. So a short sale does nothing for you. All a short sale does is it guarantees that it's going to trash your credit, and it guarantees that you will get absolutely nothing from the sale of your property. Do not do a short sale. It helps nobody but the bank. It would be better to sell for cash to an investor and at least get something than do a short sale. It would be better to have someone take over your debt and have them pay your debt off than do a short sale. A short sale is, it does nothing for the property owner. Same thing for a deed in lieu of foreclosure. A deed in lieu of foreclosure, this is where you give your property back to the bank. Once that happens, the bank's going to resell your property for a profit at a later time, and they're going to keep any profit that they make. Okay. Deed in lieu of foreclosure also show up on your credit report negatively. In a deed in lieu of foreclosure, basically you give the bank your property, you have to leave the property, you get zero compensation. Okay. Zero compensation. The only thing a deed in lieu of foreclosure does is it helps the bank by saving them the cost to do the foreclosure in the first place. There is no benefit to you, the homeowner, in a deed in lieu of foreclosure situation. So I would absolutely not even consider these two options because you get nothing. You get nothing from these options. Now, again, if your property is already sold at the auction, you can recover any lost equity via this company, Overage Refund Specialists LLC. Here's their website, overagerefunds.com. They're a BBB accredited business, and you can check out their reviews and results they've gotten from people at their website. They may also be able to give you money up front if you're able to contact them prior to the auction. Now, if your property is already sold, you may live in a state where there's a redemption period. You know, like Minnesota, for example, I think you can redeem your property, meaning you can pay off the loan or reinstate the loan up to 6 months after the property is sold. In Delaware, you have like 60 days where you can redeem your property. And there are other states that have redemption periods as well. If you're living in the property and it has sold, in addition to trying to recover your equity or your surplus funds by contacting these guys, remain in the property. Do not leave the property until somebody tells you it's time to leave. And when that day comes, if somebody comes knocking on your door and they say, hey, I represent the bank, or hey, I'm an investor, I purchase your property, here's what you need to do. You need to ask them for cash for keys. This is misspelled. Cash for keys right here. Cash for keys is simply a cash payment they will give you in exchange for you leaving the home clean and in good condition. Okay? Or just leaving the home in good condition. Cash for keys is not, it's not a right, it's not automatic. You must ask for it, guys, if you're going to get it. You need to ask for it from the investor that purchases the home at the auction or from the bank. And then you negotiate whatever that amount is. This is the other thing I'd recommend you do. If you're living in a property that gets sold, don't leave until you absolutely have to. And when you do, ask for cash for keys. Okay. It's probably not going to be a lot. Negotiate as much as you can. It'll probably be in the realm of $500 to max maybe 5,000, depending where you live. Could be more. Maybe if you live in California, it'll be a lot more. I don't know. It's whatever you negotiate with the bank or the investor. Okay. So be aware of that as well. Just because there's a foreclosure in process doesn't mean you have to vacate. You don't have to vacate until after the auction has actually occurred. So in summary, we talked about the two paths. If you have equity or you want to stay in the property, can afford to continue to keep the property, best thing to do, reinstate your loan with a private lender, pay them back using the equity in your home, continue to live there, make your payments, carry on with life. If the property is unwanted or it can't afford to continue to live there, or there's no equity, find someone to take your debt over and pay it down for you. Sell it or do foreclosure defense, rent it out, and try to get the foreclosure dismissed. Ideally, you want to be able to rent your home out for $1,500 a month or higher. If you can't rent your home out for $1,500 a month minimum, it may not be worth it to pursue this foreclosure defense, because this involves hiring an attorney to help you do this. Okay. Then, of course, if you don't want the property, you can sell it as is. You can partner with someone to fix it up and sell it for full retail, sharing the profits. You could sell or finance it, meaning you could act as the bank and someone will pay you a monthly mortgage payment. Okay, like we didn't really talk about this too much, but let's say, for example, your mortgage payment to the bank is $1,100 a month, but someone's willing to purchase the property from you for $1,500 a month. So you could take that $1,500, pay off your $1,100, and then pocket $400. That's called seller finance. That's another option. Or you could simply let it go to auction and get help recovering surplus funds if there are any. And we talked about who can help you do that. And that's this company, Overage Refund Specialists. And then, of course, there is the Renewal Support Fund. This is, again, basically where you can get cash before the auction. Okay. This is only based on for certain individuals, certain types of properties in certain states. So in order to see if your home qualifies, what you'd want to go do is go to this website, renovousa.net/help, and see if your home qualifies for that support fund. Which leads us to the next step and the final slide here. Guys, I hope you found this valuable. I hope you learned something. Hopefully you learned something that you didn't know before, and now you have a better understanding of what you can do, what your options are. And, I hope it provides you some hope. If this info didn't even apply to you, please pass it on to someone who may need it, or if you know someone who needs it. And then, of course, the next step would be to schedule a free consultation if you'd like us. If any of these, if any of these solutions that we presented to you piqued your interest or you'd like to learn more, schedule a free consultation. Happy to help where we can. There's maybe a button here where you can fill out a quick form /questionnaire, and then we can schedule something with you. If we can't help you, we could probably refer you to someone who can help you and, at least help you find some sort of solution. Okay. Whether that's stopping the auction completely, whether it's providing an offer to sell, or finding someone who's willing to take over your debt, or finding someone who's willing to loan you some funds to reinstate your loan. Or if you simply just need help recovering funds after an auction, here's what you'll do is, if your home hasn't sold yet, go to renovousa.net/help, fill out that questionnaire. If your home has sold and you want to see if there's surplus funds or an overage, that you may be entitled to, go to overagerefunds.com. And that's it, guys. I tried to be as quick as I could to respect your time. Again, I hope this was helpful. If you have questions, please comment below, or go to renovousa.net and fill out the questionnaire. And again, I hope this helps you, and I wish you the best and hope you are able to find a solution. Have a great day. We'll talk to you later.